What is the main driver of oil price right now?
I think there's so many factors. That's the problem, because you've got spreads, like you guys were just talking about. The time spreads are extremely backwardated, which points to a strong physical market. It is a tight market. Supplies are falling faster than demand, but the perception of demand is weak. Some of the backward-looking data has been weakish, but the forward-looking prognosis, definitely with the US-China trade war, is very concerning, and that's why prices just can't rally, even though structure is so backwardated. So I think that's kind of the main driver right now. Yes, we all know geopolitics is, up there in terms of lots and lots of moving parts, lots of supply losses as well. But right now, I would say demand is kind of at the forefront of people's worries.
Well, and that sort of dovetails with something that you guys wrote in your note last week, which takes a look at global inventories. You and Orbital Insights mashed your data together, and inventories globally for this year are much higher than we've seen the last couple years. Do you view that as a demand picture or a supply picture?
So I think this is one of the big concerns in the market, that why is the physical so tight if inventories are higher? And I think when we did break down the data, you can see that the entire build has actually come either in China or in the US, and partly driven by refinery maintenance. This is the season for refinery maintenance and unplanned outages, but partly also in China in particular, they've just built out a lot of storage facilities, and that's why stocks are higher. Everywhere else, stocks are actually substantially lower year on year, but I think that's where the problem is. If you just looked at the headline number, you would get a lot more bearish. Interestingly, oil on water, which is effectively how much exports have risen by from OPEC and other countries, that's plummeted, which tells you that inventories are about to fall very sharply in the coming weeks. Of course, the US, it's got the floods in the Midwest, lots of refinery outages. So I think the US is not going to draw just yet, but the rest of the world is definitely starting to draw.
So when we worry about demands and wrapping in the trade war, I mean, how much of that destocking then will be affected by that?
I think this is the biggest concern. If you remember back in Q4 2018, a big part of the demand decline was just destocking. People were so scared about the uncertainty that it's like, okay, let's just get rid of inventories. They have, I mean, when we speak to petrochemical producers, they do tell us that most of that destocking is behind them. So I don't expect to see that scale of destocking, but there will definitely be some. If you look at petrochemical margins in Asia, that's a big worry. Pretty much everything is down, and it's looking weak, because even if you don't get another round of Q4 18 like destocking, people are not willing to place new orders till they have more clarity on the trade war.
So then what's the most important data point that you're going to be looking for, say, in the next 10 to 14 days that will really be the driver for the oil market?
I would say it'll have to be the OPEC loadings, but particularly Iranian loadings. From what I'm seeing right now, Iranian exports are coming in even lower than what we had expected. So there definitely seems to be more cautiousness on the buyers front. That's on the supply side I would look out for. But on the demand side, I would be looking out for these petrochemical margins, because that's the backbone of the economy. And if that's slowing, that is telling you that, okay, the trade war might be having a bigger impact than maybe some people had expected. I'm not expecting it to be huge, but definitely something to keep an eye out for.
Petrochem margins, great. I love that. Thank you so much, Amrita Sen of Energy Aspects, joining us from London.